Good afternoon. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good afternoon, Peter.
Hello, Andrew. How are you?
Not too bad at all. Big week at the moment towards the end of earnings season, but we'll look at the domestic, not a huge amount of data out of Australia at the moment, but the consumer sentiment number did come out this week.
Yeah.
Down 2.5% when they were expecting a 0.7
I think.
Positive.
Yeah, that's a big move, Andrew. I mean, that's just a monstrous move, as you said. Up 0.7, you wanted that, and you're down 2.5. So that just shows the lead into Christmas, how November's going to look, and then naturally you've got those retail sales, but that's not a good sign.
No, and I think on the back of obviously the RBA put the interest rates up last week.
Yep.
So it's not surprising that a sentiment number came out like this, but it is pretty tough out there for a lot of people with the higher interest rates.
Yes, it certainly is. We're looking at about a 60% chance of, as far as probability, of a rate rise in December. So how that rolls across naturally to the consumer sentiment.
Yeah, for sure.
Yeah, it'll be a very, as we keep on saying, it'll be a very interesting lead up to Easter, that first quarter, January, February, March, quarter Q1 24.
Yeah, certainly will. Over to China, buying up gold.
They
Significantly.
Sure yeah, absolutely they are, and there are a couple of points on that. I mean, Putin has even said that as far as the petrodollar is concerned, either pay for oil in yuan or in gold or ruble, but there's talk that it might actually be gold. And have a look at China's numbers. I mean, they're just extraordinary. Turkey's a big, certainly very, very strong as well. And when you're looking at India, we understand, but China's out of the blocks. It's just massive as far as gold reserves.
Yeah, it certainly puts a bit of a floor under that gold price to a certain extent as well.
Yeah, it sure does. And I mean, we're sitting at that 1950 sort of handle. It was up around 2000, then it's back. But yes, when you've got buying like that, that supports price. And it'll be interesting 24 how it plays as far as the precious market. And, the little brother, I think, has possibly got even more upside than gold as a big picture as far as silver, because there just doesn't seem to be enough out there from a mining perspective, and the demand is very strong for, naturally, it goes into motherboards and you name it, from technologies and everything else.
Yeah, for sure. Japan has just come out with their GDP numbers, down quite a bit more than they expected.
Yeah, it dropped in the last hour or two, and I didn't think that it'd be as heavy as that, down negative 0.05. We had the first 3 quarters were just very, very strong for the year. They were very, very good. And then it's hit it hard. The inflation story, the yen at 150, 151. The BOJ governor, what's he going to do? What's the Prime Minister going to do? And how do they manage that from a, as far as how do they get their traction back? Back up.
Yeah, that's right.
They've got a balancing act, and there's the yen.
Yeah, like around that 150 mark now, so it's certainly under pressure. Not the only currency under pressure, but it's sort of all one-way traffic there at the moment.
Yeah, it sure is. It's been choppy, 151 down to 140 or high 149s, and then back up. And it's nothing like those big blowouts that you've seen from May, where it was just 130 to 150. But I think we'll see some movement again. It will continue to be range bound over the short term until we see some sort of commentary coming out from the BOJ. I wouldn't be surprised to even see it, possibly a 155.
Yeah, it's a big move though, isn't it?
Yeah.
US last night, the CPI number came in at 3.2%, down 0.5% from last month, slightly lower than expectations, and the equity market loved it.
Boom to the upside. Yeah, we've had 2.5 weeks of very strong growth for the equities. They bounced a little bit to the downside last week, Thursday I think it was, but Friday was strong, and last night was absolutely on fire. So that's a good sign, Andrew.
Yeah, and I think also coming into the end of the year, we've spoken about it on numerous occasions, if the fund managers aren't heavily in equities, their results at the end of the year aren't going to be too flash.
Well, they're not going to have a job.
No, so if anything, if they're trying to play a bit of catch-up, that's just going to add more fuel to the fire.
Yeah, exactly. And as you keep on saying, September, October, traditionally over that earnings season, it's very patchy, if not a downdraft. And then all of a sudden, November, December, off to the races. And we're halfway through November, brother. And it's 6 weeks to go till New Year's Eve.
That's right. But it's certainly been strong the last sort of 10 days or so.
Yep.
And once again, on the back of last night, the CPI, the 2s and the 10s came off quite a bit. So those 10s are off about 0.5% in a week. So the market is clearly saying no more interest rate rises for the foreseeable future. That's not to say they won't go up early in the new year, but at the moment they feel as though the Fed's done the job.
Yep. And, you know, you've got to, we've just got to live through this now as far as that inflation number. It's pointing in the right direction. So, as you said, it might be Jay Powell and his team. I think they'll sit on the sidelines, certainly over the winter period, winter Northern Hemisphere, that is, and have another look, you know, February or March.
Yeah. So, finally, a chart on the 4 big tech companies. Obviously, we're coming up to the end of earnings season. Once again, the earnings have been pretty good. Like 70 to 80% of the companies have beat the forecast. Yeah, but these 4, obviously everyone knows them, but it's extraordinary just sort of looking where the bulk of their revenue comes from. Quite diverse, and they're making plenty of money.
They sure are. This just on that chart to all of our viewers, really, you know, stop it right now on the when you see this and stop the play and analyse not only revenue, but you've also got to look at web services, you've got to look at the cloud, and you've got to look at where Amazon is making a lot of their money and where companies like Microsoft see opportunity, and that's going to be very much on, you know, cloud-based services. You know, where you look there, Andrew, 52% for Apple, iPhone, 51% online stores for Amazon. You look at search for Google, 58%, and you look at naturally cloud services for Microsoft at 31%. Everyone's going to try and fall into that frontier to see where there's opportunity to grow revenue. And, you know, your web services for AWS, for Amazon, all of them are going to jump into this. And as you said earlier, and it's a very interesting stat, you were saying approximately 90% of all companies still are having comms rooms. And the old comms rooms, and there's the servers, versus throw them in the bin, and they run out of space, and they're expensive to keep. Refrigerate the room or keep the room cool. Go to something like, you know, a web-based or a cloud-based, takes all of that ownership and all those responsibilities away.
Yeah.
And so there's a big chance for growth over the next couple of years. Monstrous.
And I think the other side of the comms rooms in these large organisations, it's the real estate it takes up as well. It can take up, you know, a quarter of your floor. And if you're 100%. In some premium building in whatever city, it's a significant amount of money. So, but it's sort of interesting, like some of these businesses here, or some of these departments, if you want to call them that, within these companies, they could just be fed off into their own company. Like YouTube could be listed as YouTube. Well,
when you look at YouTube, I mean, that's just extraordinary. 31.7 billion revenue from YouTube ads. So you can see why the people say, well, I've got, you know, 500,000 followers on YouTube, and I've got a big audience base, and that's where, you know, influencers and everyone has that. They produce content, and you can see, well, there's 32 billion jumping through the door.
Yeah, it's incredible. And Apple, their wearables, which are like the AirPods, etc., make up 10% of their revenue, 35 billion.
It's just extraordinary.
It is. When it breaks it down like that, it just shows you.
It's a great chart.
How impressive they are. But
And so, all to our viewers, please study it, because that really gives, I think, a little bit of a lesson from, you know, what revenue and what can be achieved, and what these companies are achieving, and just it demonstrates, you know, the performance of these organisations. And you'd have to be, I think, very, very naive not to think that these are going to not only grow, but probably keep on outperforming the general market for the rest of this decade.
Well, you would think so. And if you're thinking long term, you think, will these 4 companies be around in 20 years' time?
I would say, well, I toss of the coin, I'd be saying yes.
Probably yes. They've been around for a long time already. Like some of them were listed back in the 80s and 90s. So you sort of think they've already been listed for sort of probably 20 or 30 years. So
yes.
But interesting sort of stats there.
Quite extraordinary.
Good stuff. All right, we'll keep an eye on things over the next week, and we'll regroup again next week.
Yeah, we've got a bit of information coming out. I think it's going to be a choppy week for currencies, and we'll just have to look and see if we get updraft as far as energy prices. I'm looking forward to seeing you next week.
Yeah, good stuff. Thanks, Pete.
Thank you, Andrew.
And that's the XM.com weekly market update.